by R. Vishalam, who wants to know whether investment in a pharma fund will fetch good profits.
I'll suggest him to avoid investing in pharma funds and rather continue to invest in the more mainstream diversified equity funds. And this is not just for pharma funds, but for any sector fund for that matter. Because typically, if you see a lot of retail investors start taking note of any sector fund after it has run up substantially. So it's the tendency to chase the momentum that drives investors towards a particular sector fund, which eventually can lead to disappointment in many cases. So, for instance, if we take the case of pharma funds itself, now look at some of these graphics that we'll put up. Pharma funds have delivered tremendous returns in year 2020. As a sector, it was up around 60% or more than that to be among the top performers of 2020. Now, if we really break down the performance of pharma sector into 4 calendar quarters of the year, you would notice that a bulk of those returns were delivered by pharmaceutical companies in the second quarter of the year. That's the quarter ending June. Now, as per our estimates, our calculations suggest that the bulk of money came into pharma funds in the third quarter of 2020. That's the quarter ending September 2020. So, while the pharma funds delivered returns, but a lot of investors did not make all those returns because they ended up investing after a bulk of that momentum had passed. And in fact, in the last quarter of 2020, pharma stocks happened to be the bottom performers as many other sectors outperformed them by a fair margin. So the point is that this further reinforces the futility of trying to chase the momentum because, as I said, a lot of investors take note of a sector after it has already run up substantially. And typically, every now and then, every other time, there would be one or the other sector which would appear as the top performer. But it is very difficult to time your entry and exit into a particular sector with precision to be able to benefit from these momentums that happen in different sectors at different points in time. Now, this is one side of the story. Now, look at the graph that we are going to put on your screen, where I would try and walk you through the other side of this picture. So look at the diversified equity funds and the trends in their exposure to pharma as a sector. So you would notice that through the 2020, the exposure to pharma as a sector in diversified equity funds increased from about 5% at the start to about 9% over the year. Not only that, because of this, pharma as a sector, its ranking among the sectoral holdings of these funds increased from sixth ranked sector to be among the top three. And if you notice, this rise in allocation among diversified equity funds happened fairly early in the year, so that these funds and their investors would have been able to benefit from the rise in the stocks of this sector. So this further reinforces the fact that with diversified equity funds, you would have got adequate exposure to pharma as a sector in 2020, and therefore there was really no need for a separate allocation. You did not need to carve out a separate allocation by investing in funds that focus on the pharma sector only. So by and large, I'd say that for a vast majority of retail investors, sector funds are avoidable and they should continue to focus on diversified equity funds.
All right, so avoid the temptation to invest in sectoral funds and opt for diversified equity funds instead.